Yashpal, can you broadly update us how essentially your loan disbursement has moved in the month of October? Is it lower than historical average? Are you going slow in your home loan disbursements?
Yes, good morning. See, first of all, our borrower segment, unlike many other NBFCs and HFCs, are purely individuals, and about 60% of them are self-constructed houses. So, our disbursement has not been affected at all. With all these structural issues that are cropping up, we have been maintaining that it's not a liability mismatch alone, it's also the asset composition which is important. Many NBFCs and HFCs, as we are now slowly figuring out, have got huge loans to builders, they've got loans to SME sector, and then when many other products like structured finance and others. For us, it's a simple vanilla product. So for us, the effect has not been much, even if of course, I don't have the numbers ready now, but the disbursement figures are almost in line with what we achieve year on year.
Source of your fund, how much of your current borrowing is short term in nature, where the rollovers are due in next 3 to 4 weeks, and what has been the source of funding? And when you talk to some of your lenders, essentially from the commercial market, are they ready to roll over the paper?
See, commercial paper outstanding is only about 350 crores, and they will be maturing by December. I don't have exact data of 3 to 4 weeks, but you can say couple of months. And yes, the commercial paper rates have gone up by about 30 to 35 BPS, and there seems to be some tightening on that. But because our commercial paper outstanding of 350 crores are less than 4% of our total outstanding borrowings of 8,500 crores, so we don't see much challenge there. We'll be able to meet that gap if the commercial papers are not available at that time from our traditional source of borrowing, which is a consortium of about 18 to 20 banks. Now, as far as banks are concerned, we don't see much challenge as such. In fact, we are getting some additional sanctions. We have got some additional sanctions from banks even during the current month. And so far, we have no problem in drawing up the outstanding, unutilized limits. The interest rates have gone up by about 25-30 BPS, but availability of money for us is not a challenge as of now.
That's assuring to hear.
Yashpal, closing comments from you. Do you think the current turmoil in the NBFC space, one side you've got liquidity crunch, second side you've got interest rates moving higher, could eventually have an impact on HFC demand? It may not happen for you, it may not happen for 2 more companies, but in general, do you think the growth rates could come down by 25 to 30% for the sector per se?
See, of course, it is difficult to name a percentage, but definitely, if you see last few years, after the AQR came into effect and the banks went slow on lending, the NBFC and HFC segment has captured a large amount of bank space. The share of NBFCs and HFCs has gone up to 24% from 20%. But they are getting funding majorly from banks and maybe from some mutual funds and other debt markets. So the liquidity issue combined with, again I am repeating, it's not a liquidity issue alone, it's also their asset quality issue and asset composition issue. If these things continue, definitely the overall segmental growth rate will come down. Now, whether it will come down by 10% or 25%, it is difficult to assign a number to it, but definitely it will get affected, at least in the short term. Now, even for HFCs like us, what happens is that even though we don't have much exposure or rather any exposure to this, what I call as a high risk segment, or we don't have capability of builder funding or SME funding, but even the normal person, when we borrow, when we lend money to him, his EMI goes up, so obviously he does get affected, and the real estate issues like approvals, like the cost of construction, they are also going up. So it does have an effect, but how much it will be, it is difficult to say.